Welcome, everyone. We're about to jump headfirst into the RBI's latest report on financial innovation. Now, if you're gearing up for exams or you just want to understand where India's economy is headed, this is an absolute goldmine. We're going to break down all the key findings, the crucial data, and the new jargon you really need to get a handle on.
So let's start with a really simple question. Just think about it. That quick UPI scan you do every single day, maybe for your morning coffee or groceries. That one little action, when you multiply it by millions and millions of people, is actually the tip of a colossal iceberg. It's a sign of a massive economic shift, and this RBI report tells us exactly how that revolution is being built piece by piece.
So here's our game plan. We'll kick things off with the big ideas, the core concepts. Then we'll look at the mind-boggling growth numbers. After that, we'll meet the new players shaking things up, do a deep dive into the world of digital loans, and finally, see how the RBI is trying to manage this whole new landscape. Let's get into it.
Okay, first things first. Before we can really get into the nitty-gritty, we have to understand the engine that's driving all this incredible change. What's the foundation it's all built on?
And that engine, the very bedrock of this entire revolution, is something called the India Stack. Now, this isn't an app or some private company. Think of it as a set of public digital highways built by the government that allows all this financial innovation to happen. It's the critical infrastructure that makes everything else possible.
The India Stack is basically built in 3 layers, each one stacked on top of the next. At the bottom, you have the identity layer. That's Aadhaar. It solves the fundamental problem of knowing who you are, digitally. Then, built on that, you have the payments layer. That's UPI, which lets money fly between accounts instantly. And finally, the top layer is the data layer, with account aggregators. This one's a real game changer, because it lets you share your own financial data securely, but only when you give your consent.
Okay, so we've got the foundation down. Now let's get to the really exciting part, the numbers, because the data tells a truly incredible story about just how fast India is jumping on this digital finance bandwagon.
Just look at this number for a second. 87%. That is India's fintech adoption rate. And to put that in perspective, the global average is way down at 64%. For anyone studying for an exam, this is a number you have to burn into your memory. India is leading the world here. It's just phenomenal. Now, this chart from the report is super revealing. It shows who's really pushing the digital agenda in the banking world. And it's crystal clear. The big private banks are way out in front. Public sector banks, well, they're in the race, but they're definitely playing catch-up. And this gap is creating a whole new competitive playing field.
And what's the real-world impact of that? Well, it's causing a massive shakeup. With private banks and all these new players moving at lightning speed, the traditional banks are feeling some serious heat. Their old business models and profit margins are under pressure. Going digital isn't just a cool feature anymore, it's about survival.
This brings us perfectly to the new kids on the block, the ones who are really stirring the pot. The RBI report neatly divides them into 2 major categories. You've got your fintechs, and then you've got the even bigger fish, the big techs. What's happening is a classic case of partnership making perfect sense. On one hand, you have the banks. They bring decades of trust, a huge customer base, and they know how to navigate all the complex regulations. On the other hand, you've got the fintechs. They're fast, they're innovative, and they are masters at creating amazing user experiences and crunching data. Put them together, and you get the best of both worlds. Now, let's define this other crucial term, big techs. We're not talking about small startups here. These are the giants, the massive e-commerce platforms, the social media networks. They have something the report calls a data network activity feedback loop. Basically, the more users they get, the more data they have. The more data they have, the better their service gets. And the better the service, the more users they attract. It's a powerful cycle that they're now using to muscle into finance.
And if you need proof of how dominant they are, get a load of this. Over 90%. Let me say that again. More than 90% of the entire UPI transaction volume is handled by apps backed by these big tech companies. That's just a staggering level of market concentration. And that, of course, leads to a huge critical question, a question that keeps regulators up at night. Are we just swapping out the old bank monopolies for a new generation of digital ones? Ensuring financial stability in the face of this kind of market power is a major challenge for the RBI.
All right, let's switch gears and zoom in on one of the fastest moving parts of this whole revolution, digital lending. The RBI report spends a lot of time on this, and for good reason.
You know, the big dream here is to democratize credit, to make loans accessible to millions of people who are previously locked out of the system. And to achieve this,
India isn't just building apps, it's building fundamental new infrastructure, those digital highways we talked about, specifically for credit.
Okay, everyone with an exam on the horizon, this slide is for you. We've got a mnemonic to help you remember these crucial platforms. Just think TOPA. T is for TREDS, which is a lifeline for small businesses waiting on payments. O is for OSEN, an open network that's like a marketplace for loans. P is for the public tech platform for frictionless credit, a big new RBI project. And A is for the account aggregators we already covered. Seriously, remember TOPA.
So who's actually taking out these digital loans? This snapshot gives us a really clear picture. The typical borrower is young, under 30, and often from a semi-urban or rural part of India. And look at the loan sizes. They're tiny. The average is just around 11,000 rupees. But here's something really important to notice, the gender divide. Only 14% of these borrowers are women, which shows there's still a long way to go on financial inclusion.
Okay, last section. Let's talk about the regulatory tightrope walk. With all this wild, fast-paced innovation, how does the RBI make sure the system stays stable and that you, the customer, are protected? It's all about finding that perfect balance.
Here's another key term you absolutely need to know: default loss guarantee, or DLG. It sounds technical, but the idea is simple. It's an agreement where the fintech partner, the lending service provider, promises to cover a part of the losses if loans go bad. But, and this is the crucial part that the RBI stepped in with, that guarantee is capped at 5%. This prevents banks from taking on hidden risks through these partnerships.
Another really interesting regulatory approach is the SRO-FT framework. This stands for a self-regulatory organization for fintech. Instead of the RBI dictating every single rule, it's encouraging the industry to come together and regulate itself, to set its own code of conduct and best practices. It's a very modern way to foster responsible innovation. All right, we've covered a ton of ground, so let's boil it all down into one ultimate revision slide. These are the absolute must-know takeaways. India's fintech adoption is #1 in the world at 87%. Private banks are leading the digital race. Big techs have a massive 90% plus share of UPI payments. Do not forget the credit platform mnemonic, Top A. The average fintech loan is small, about $11,000. And finally, know your key jargon, DLG and SRO-FT, and be aware of key RBI moves like the regulatory sandbox and PTPFC.
And with that, we're at the end of our deep dive. This report gives us an amazing picture of where we are right now, but it really gets you thinking about what's next. So I'll leave you with a final thought to chew on. As artificial intelligence gets more and more powerful, what do you think is going to be the next big earthquake to shake up the world of Indian finance? Thanks for joining me.